Our guest tonight is Dariusz Kowalczyk, Chief Investment Strategist at SJS Markets in Hong Kong. Now, Derek, Asian markets have run up quite a bit since they hit a low in early March. Now, they've given back some of the gains this week. So is this the start of a necessary correction?
I think that correction was inevitable because a lot of these markets were really very sharply up in high double digits. So it's not surprising that there is temptation for some investors to take profits. At the same time, however, I do not expect the correction to deepen because outlook for growth and earnings remains positive. In particular, when it comes to China, I think that yesterday was a great day to actually jump into the market because the 20% correction through yesterday made valuations there quite attractive.
Now, Derek, correct me if I'm wrong, but it sounded like also you're saying that overall the pullback is likely to be quite short-term and that fundamentals are pointing to perhaps more upside for Asian markets in the longer term.
Exactly. I believe that as the year unfolds, it will become increasingly clear that the global economy is emerging out of the recession. We've already seen evidence of that, not only in China, but also in Japan, Singapore, Hong Kong, Korea, throughout the region. So investors can be confident that earnings growth will follow the rebound in economic activity. And therefore, I believe that there is still some upside left in equity markets of our region, although it has to be said that gains in the second half cannot be as dramatic as they were in the first half of the year.
So what would you say to investors who have so far, because of the uncertainty in the markets, have adopted a more risk-averse stance to portfolio allocation? Would you tell them to go ahead, or would you say that cash is still king at this stage?
I believe that we should not become risk-averse because it's increasingly clear that risks are in decline and therefore there is no point at this level to actually try to increase the perception of risk. And I think that staying in cash right now, when interest rates by central banks are still so low, would not really make sense. To the contrary, overweight position in equity markets is probably the most reasonable stance.
Dariusz Kowalczyk, thank you so much. I've been speaking with Dariusz Kowalczyk from SJS Markets in Hong Kong.